Okay, guys. Hi, this is Simon with ToughTrader.com and Trade and Perform Coaching, doing the trade review for the 22nd of March. It's a little bit ugly out there today. So I wanted to cover a couple of things. First of all, how we read that it was potentially a trend day down, right? How we, hold on one second. Let me make sure I'm not getting Thursday. Nope, I'm going to cancel that. Put off the back. Secondly, I apologize. I want to address risk management on a trend day down, right? And in general, I want to talk about how the market's changed a little bit and why that's important to the way you're trading. Okay, so if anyone has any questions while we're doing this, you can either hit me on the Twitter, or you can hit me on, if you're in the room, you can hit me in the chat box. Or for those of you who have access, you can hit me on Skype. So let's kind of get started. Before we get started, the normal past performance is not indicative of future results, right? This is for educational purposes only. I'm sharing my trade plan with you in hopes it'll make you a better trader. My trade plan doesn't work for everybody, right? I'm primarily a scalper. I work through the day to try to pull down a 70 to 80% win rate, which is high. Now using an algorithm that we've just instituted in the room that's really helped things out get clearer. The zones, we use them as support resistance areas, but I clearly don't know what will absolutely work and won't work. What I do know is exactly where I want to take a trade and exactly where I'll stop a trade. And that's a very big edge, particularly when you can actually lay out your locations in a particular area. So let's jump in. Obviously, we can see it's an ugly day. My guess is we're going to, as weak as it is, guessing, but that we're going to close down into this part of the profile down here. So when we started off this morning, first of all, we were down huge, 100 points on NQ, and we were down significantly on ES, right? So let's just kind of take the decision step by step. So number one, I chose not to trade the first half hour. Why was that? The reason why I chose not to trade the first half hour is the same as every other day when I choose not to. Either I choose to trade, or when I do trade, I have difficulty, which is I cannot tell if they're going to run it straight up or straight down out of the gate. If you can, you're a better trader than I am. Now, what everyone has gotten used to in the market is the market opening up and going straight up from dips in the hole. That part happened, right? What they haven't gotten used to is this constant two-sided whip back and forth that's become a standard in both markets, ES and NQ. This has become normal, this back and forth movement. And the reason why that has become difficult is because a lot of people have gotten used to nailing the lows, right? Or even if you didn't get the lows, say you bought them early, and then having the market push up, and you can just sit there and hold it and have it close at the high. That's no longer the case. And if your trade plan calls for, hey, I've got location, and I'm not letting go of the trade all day long, you are having a hard time in this market. If your trade plan, for me, which calls for scalping through the course of the day, my trades have gotten a lot better because I'm getting extensions going on both sides. Although today I was very hesitant to get long, and I'm going to cover why. So let's go look at the volume profile to start with. So we were clearly in risk off when we started the day. That's the algo. Let me fix this. This is not the time for you not to be working. There you are. There we go. And the TPO. So let's start the important parts first. So the important part of the trade plan comes off the day time frame. So before we look at the TPO, look at the notes that were written in ES. Okay. So I wrote, this is the current swing low. This was a white zone. This is a very important area for the market to hold. And you can see the first time we pushed into it, we got a nice fat rotation. Okay. The yellow zone is high odds, but it's not as high as the white zone. The yellow zone is second high odds. The white zone is the highest odds of the day. Okay, so if we look, we wanted two things to occur, and members in the room were pretty astute at figuring this out. Number one, we pushed right into this anomaly, we traded underneath, and we attempted to push out. That made sense from a chart standpoint. Why did this make sense? What this is here is this chart. Wow, they're just annihilating ES here on the close. Caution if you're trying to catch a falling 18-wheeler, might be landing on your head. That's pretty ugly. Okay, so when we looked over here, we noted two things that were notable. So I want to point this out. Number one, See how flat and smooth this point of control is, or this TPO. It's easy to trade through. We traded over it, and we left it while this specific area was poorly auctioned. We also left it poorly auctioned again from the overnight. Next, we gapped down today, so I'm going to erase this out. Right? We gapped down, and we gapped down below this week's swing low. So anytime you break a low when you're opening, I'm going to break this out. Anytime you break a low, right, on the open, what do you expect? Well, I expect that swing low to get tested, and that's exactly what happened. That was the 68.20 to 21. So what I want to do is go back and forth and compare this to what I spoke about this morning as to what actually laid out during the day. So when you look, where do we push back up? Right back to this week's low. And I wrote in the notes, look for double bottom attempts here. Well, think about the flip side of that trade, right? If you're looking for a double bottom attempt when it gets here, guess is what's going to happen. Everyone's looking at that point visually. They rejected right out of that point, and it made perfect sense, right? Also, what was the rotation size? In this morning's trade, I talked about 10-point rotations being important in ES. So let's go look at that. We'll draw it, and then we'll erase it. So 2680 brings up 2690, right? And you'll see approximately in that 2690 area, we get a counter rotation, right? We get that counter rotation down to 2684.75. From 2685, if you add 10 points, gets you to 2695. That's approximately another 10 up. And if you look a little bit past that, and what I said specifically was, now go look when you get 10 up, is there anything in that area that they might reject off of? Because ES traders will get exhausted in that area potentially. Here's where they became exhausted. Next piece, what do you need to make sure you are not running into a trade that's running out of control, meaning don't just short as it's pushing up. Get underneath your last best 5-minute buyer, or in some cases, if we've been having this more and more where your last best 5-minute buyer is actually a red bar, at least get underneath your last 5-minute high bar and then look for counter rotations back up to take the trade back to the downside. We got all of that, not perfectly, but pretty close right here, and you certainly knew where to take trades out. Next, I said, what was very, very important is now that we've established above the 5-minute high is that we hold above the 5-minute high. So when this bar closes right here, you know that the market's in trouble. On this close right here, you know we have a good chance of shooting to the downside, right? So next, I'm going to remove this, right? If you look at the rotation size and where the market tried to counter-rotate as we were going down, 2697 to 87, we get a counter-rotation, it fails. If you look again, you go from 88 to 78, and that gives you an approximate area where the market tried to hold. Again, it failed. If you look, the swing high was 80. You take away 80, and you come down to 70. You can see, again, the computers try to step in right at 70 and push it back up. Failed. That swing high was 75. You take 75 away, and you add another 10. That brings you into 65, and they finally turned it. The point isn't on the 10-point rotations that the market is going to be magical and just turn around and go up from there. Not at all. What is important at that particular trade location, I'm going to close this real quick. What is important at that particular trade location is that you're now going to look for areas that make sense. So think about it. Okay, I got 10-point rotation down. This is even without using the algo that we use in the room to find location. If you're sitting there going, okay, I've got 10 points down, right? I know this is an important area. If you took the top of this 2678, it rotated all the way up to 2680. Stop that. That's an alarm. It rotates up to 2680. That's a rotation from 78. You get 2 points put in the bank, right? Next, what's your next location that comes up, right? If you look here, you then rotated right down to 2673.75 on this first rotation. You were able to achieve 2 points on this first touch, right? Here's the first touch of the 2673 3/4. Where does it rotate back up to? Right back to 2680 for a 7-point counter rotation. Notice where the failures are coming from on the zones is not from the first touch or even the second backside touch, right? Let me restate that. The failures are coming from the second and third touches, right? So this is technically the first move into that yellow zone. They tried to reject. They couldn't. They pushed out. Second touch worked. On the next yellow zone, first touch in gave you a 2-point rotation, a chance to move your stop up to break even and to see if your trailers would run. First touch into 2673.75, You get an immediate rotation all the way back up to 2680, clearly giving you a 2-point rotation and the ability to scale. What's the importance of that? The importance is that you know when you're combining with 10 points and you're looking for where the zone goes, and for guys who've been in the room for a long time, that's an automatic, hey, I have an idea of where I'm looking for my trade today, right? Even if I want to short, right? Look at how it worked on the opposite side. You get up on the backside of the white zone, rejection. Backside of the yellow zone, rejection. Huge rejection? No, but you do get rejection in time to think through your trade and attempt to hit your scales. Backside test of the 26.8475. First time on the backside test, huge counter rotation. Second time in, pushes behind, and eventually it fails and pushes back down. If you combine both these areas with either taking the zone straight, right, and measuring what your win rate is, which those zones have worked for a long, long time, right? First time in gave you the 2 points. If you are trying to avoid getting steamrolled in a move like this, what you want to do is wait till you get above your last best seller, which you'll notice all the way through here. You really couldn't do it till you get over here. Notice when we got to the low, we backside tested our last best seller, and then look at the push out. Again, if you look, this became your – so you had to make an adaptation when the volatility goes wide. This technically became your last best low bar. You closed above it. You backside tested to the tick, and look at the push you get again. When you get up here, this is your first close underneath your last best buyer's bars, right? Close beneath, backside test, push again. That method requires no guidance. You don't need me to help you with that. What you need is trade location and the patience to let it execute, and then the mental ability to stay with the trade so that you can get filled as you're going through the course of the day. Okay, now let's roll through and look at how the day played out after that. How did we know that it might be a significant trend day down? So you look, we opened up. Here's the gap fill. Here's the open. First thing I'm going to do is I'm going to make 3 assessments. I'm going to go back over to this chart, the daily chart, right? So this is right out of mind, out of markets. I didn't invent this. I just execute it pretty well, right, in terms of my thought process. Okay, guys in the room, what do we need first? We know that if we cannot get above prior day's value area low, any push to the upside will be limited in its scope unless we can trap back in. Now, granted, if we counter rally from 67.72 all the way back up to 68.25, that's a different story. But when we were up here, the requirement had to be that we trap back into value area low. It's clearly marked on the chart. We didn't do it. That's your first clue, right, that we might actually roll back to the downside. Additionally, if you look, right, after the first hour of the day, we rejected right out of the swing low from this week. That goes back to Monday, right? Unable to establish back inside the range of value for the week. If this is my low value area right here, right, think about it. That's my value area low. Even without looking at a weekly chart, I know I got to get back in here to be back in the range, right, to give me a chance to push back up. Second clue, failure to get to settle gap. Third clue, failure to get to Dalton's gap fill. Again, straight out of mind over markets, right? Those are my 3 requirements for having to push to the that's what had to happen. I had to get past these markers, or at least get into 68.25 to push back to test Dalton's gap and to test the gap fill. So when that didn't happen, right? So remember, there's 2 sides to the story. If you're bullish, right, and you're not willing to short, you at least knew what had to happen, and what you would have hoped for would have been a push in, a backside test, and then a push back into either the settle price or into the TPO point of control. On ES, right, same process. Man, that is just a horribly ugly chart, guys. Watch we're minus 172, and this can be a severely ugly close. Just watch your P&Ls. All I ask of my members in the room, don't draw down in the last hour. It's why I don't trade the last hour. Okay, if you look, right, what was our first requirement? Very simple. Got to get above 26. Right? A, I got to get above 26.9650. B, I got to get back into the week's value area, 26.9875. C, I got to make it back into yesterday's value area at 27.1875. I said in the market, I said, your resistance is right. We're right into resistance right up here, right? We pushed in. As you can see, we couldn't close back into the value area, rejected. When you go look at that from a half-hour perspective, push in, push out, end of the first hour, we have not consolidated anywhere close to prior day's value area, which is a requirement at a minimum to have an up day, right? B, we had to close into the value area. Where is this all going as a trader if you're trying to make decisions, right? So what we're doing is when I go look at the algo is triggering on tiny little bars, right? ES is triggering off of 2-point bars. The NQ is triggering off of 5-range bars. If I don't know what this looks like, it makes it really hard for me to make trading decisions, right? The next thing that I noted was that I said I thought that this would get blown up right here. I thought this would get blown up because it had almost been tested, and that this to this to this little anomaly right over here, that somewhere in here, this gave you your best chance for a long. Now, I got to tell you, when I looked at it in there, I didn't like the long today, nor did I take it. Okay, I did not take a long for 2 reasons. A, we were coming up on the president's tax speech or tariff speech, right? And I didn't trust it going in. B, markets don't like tariffs. If you don't know anything about the history of tariffs in the market, go look. It ain't pretty, okay? So I did not want to get long into that. C, I was wrong, right? I was completely wrong. This market lifted all the way up through here. However, by the time we got here in the room, based on the algos, we already racked up a really nice day on both ES and NQ, right? So I want to spread this out for a second, right? The next thing Daniel asked me, who was in the room, is he goes, hey, we stopped one timing. And I said, that is correct. When you stop one timing, so I did not take this trade, but the trade is valid, right? You can only do so many things. So I want to remind everyone of what my disadvantages are. I'm ADD and I'm dyslexic. I cannot spell, and it is hard for me to hold 20 or 30 ideas in my head and organize them and execute them well. So I've created an algorithm that helps me get trades in pretty good locations and keeps me with a high win rate. But that also means that I let other things slip. Members in the room know about it, and we tend to work as a team, right? So Daniel, you asked earlier about the one timing. Notice the one time swing highs right here, right? I want to show you something. We opened right here, and then we rolled all the way down here. I want to show you something. If you were looking for that trade, Daniel, here's your 50-60, right? There's the push into the 50-60 right there, and there's your swing all the way back up to 26.92. I teach that trade all the time. I did not take it. Why did I not take it today? Because I had an overwhelming feeling, right? So there's 2 things. I have a trade plan, and I have the right to override my trade plan, right? I did not like the long today because I thought the market was in trouble. I cannot put my finger on what it is that I thought the market was in trouble for other than this. When you look at profiles and you can't trade into the prior day's profile, forget trading out of it. When you can't trade back into the prior day's value area, the rule of thumb is you tend to close at an extreme away from the open. Okay, now, I don't know that that will happen today. It doesn't happen every day, and it's a poor bet to bet that we will close on the low. However, that does not mean I have to be confident about being long. Secondly, it is hard for the market when you look at this chart. This chart is so useful, right? Pull this chart in. What about that chart? Now looks super bullish. If you'll notice where we tend to push really hard, see where we push really hard on these days over here? See where we're pushing really hard? You'll notice there's one characteristic that stands out above all the other days, and that is we're above the prior day's value area and pushing up, pushing up, pushing up above. So guess what happens when we get underneath these value areas? We push down, we push down, we push down, right? Underneath value area, we tend to push down. There's some big reversals out of those, but I didn't think we were going to have that big reversal today, okay? And it is harder to push up when you are below a value area, and now we're below 3 days of value area, and we are stair-stepping to the downside with an inability to break the swing highs that you can see very easily. That's all reconnaissance you can grab from the market very, very easily before you ever walk into the room. Before I ever say a word, you go, this is what I want to see. I want to see X, Y, and Z, right? When you go look at NQ, same picture, right? So I pull this in. Okay. Now go look at your picture. Look at what's going on here. We can't get above the prior value areas. We're stuck. See that? Look where NQ tends to push, above value, right? So everyone's going to point down here and they're going to go, well, what about this? Well, look at these big up days off the lows. Look at these days that are closing up. They're above the prior day's value areas, right? So sure, there's reversals off lows, but we tend to have a good value area sitting right below us to help us push out. So it wasn't crazy for me to go, you know, I kind of don't trust the long side. Now, did it cost me some good trades? It sure did. We could have had more P&L on the table, but that attitude also helped me out in terms of not forcing the long down here near the low when we're down near 175, and it looks like the market wants to close at the low, or it's going to make a stretch to come back into value area low right over here. And I can't tell with 10 minutes left which one it wants to do. My guess would be we get a long liquidation right at the end of the day. But I could be wrong about that, right? Next, if you are buying overnight, remember your support area. What does your support area look like to the left is what your question should be. That's what you're leaning against. Let's go look. And these are all questions you should be asking before just taking a trade randomly, right? Look to your left. You're hunting for what's underneath that big orange line. I don't know if I can find it. What trade right now? 67. This should be lighting up. Why isn't it? Is that it? Is 67.12. Wait a minute. Let's start this over. 66.97. There we go. There's 66.97. Let's drag it in a bit. Ah, there we are. So underneath 66.97, what am I looking for here? Big hole in the profile. See that right there? The market wants to fix this, most likely, right? We're not that far away from being able to do that either. I would be targeting this for a potential reversal back up. Naked TPO and naked volume point of control that have been untested, I would target that for potential reversal. Then you have a hole in the profile right here from 66.14 to 66.04, and the auction's complete at 65, 66.75. You will also notice if we get behind this 65, 66.75 and fail to reverse, which is hard to imagine, right? Notice that behind here, all the points of control have been tested till all the way down here. That is a dangerous formula. This could really sweep quite easily. There's nothing prominent underneath 65, 66. That is not me being bearish. That is me being cognizant that if we hold below 65, 66, that 63.79 is a valid potential target to the downside, right? So I do not think we're going to fall apart. I'm not predicting Armageddon. All I'm saying is stating a fact. 65, 66 should provide us with a tradable counter rotation, as should this area, as should this area. But if we establish behind 65, 66, there's not much. I cannot hang my head on much. There's also a little tiny hole. It would be such a far stretch that they might hang their hat on that 64, 26, 75, but that's a maybe, right? So that gives me a map to look at to the downside, right? Now, let's go do the same thing on ES so we can figure this thing out to the downside. On ES, that's NQ. Where is my ES? There we are. Okay, let's erase all lines. I'm going to wrap this up in just a minute, guys. Okay, closing near the low of the day, not looking very pretty, right? And I said this morning, 200 points was certainly within the purview of NQ being done, and 50 was certainly in the purview of ES getting done, right? So if we look back, first thing I'm going to notice, this is the area I'm interested in, right? That's what we're banging against. What's in that area? So let's go find out. What's underneath 2641? It's a little concerning. We have an untested closing print. Okay, so notice this closing print was almost tested. It was like within a little tick. See, there's barely any space here. If you look closely, it was almost tested, but not quite. Potential target for counter rotation, 2624. Let's back it up. there's an anomaly right there. So let's call it 26.24 to 26.18 is probably an area someone's going to try and catch. It's a big stretch, right? Below, the biggest problem with this profile, see how that's prominent, easy to see. See how this is not prominent? The TPO and the point of control are spread apart and they're not prominent. It's important to know. That means this is susceptible. You would guess that someone would try to hold it because it's also at the round number, but this would be a yellow zone because this is simply not prominent. There's also a little hole. And then behind there, right, so notice this was a trend day up, right? You can tell from just looking at the way the profile looks, that was trend day up. So you can go back and look at February 9th. That's the date we'll be working on, okay? And there's a hole in the profile, very shallow hole, but it's there, okay, at 25.78 to 25.83, right? And then underneath that, unfortunately, there ain't jack. That's the swing low before we launched, all the way back at 25.36, and that would take us all the way back to February. So I'm not even going to bother charting underneath that, right? We're currently trading 26.45. And if you look, the reason why the market's having a hard time reversing is there's not much to fix. We're in these single prints, and sometimes the market will use these single prints as a foothold, but they're not a great foothold to risk a lot of capital on that they will or won't hold. And my guess is it'll at least want to come back to this anomaly, to the settle price or the anomaly right in here to get a reversal. So we'll see overnight 26.18 to 26.24. That would be where I'm looking to get the first response of buyers down in this area. There may be too many shorts at the end of the day, and they may need to do some covering here. But my guess is we get some continuation overnight into Asia, okay? Additionally, the Chinese markets won't view and the Asian markets probably won't view levying taxes on their taxes on Asian goods. That won't be happy news for them. I can't see them responding positively to that, right? Additionally, if we gap into those areas tomorrow, that would be a big clue. So what's the next thing that I want to see for tomorrow, right? So I'm going to come in, I'm going to be like, oh, I might get a reversal, right? I know that what I'd like to see, short of an open drive higher that's obvious, right, is if I open inside this area tomorrow, right, this is the bottom of value for today, I would like to see this bottom of value hold, right? I'd like to see it underneath 26.68. I know if we hold 26.68, I have a good chance of auctioning all the way through this thing to the top of this area up here at 26.90. But my concern is more that we gap down. And if we gap down, I'm going to ask the same questions. Can we fill the gap? Can we get past Dalton's gap fill, whatever the settle price ends up be, which looks like it's going to end up being the low of the day, but we'll see, right? And then depending on how big the gap is, these are the areas I'm looking lower. And then I'm going to ask the same questions, right, for tomorrow. So you don't make the same mistake again. If you made a mistake, or you can have the same read again, right? So I'm going to come through the same checklist, right? And I'm going to go, can I get above my first 5-minute bar, or am I below my first 5-minute bar, right? Next, can I get above my last best seller, or can I get below my last best buyer? And I'm going to go through and go ask, where are my critical levels on my chart so that I can trade out of those locations? You notice we're trying to hold that 26.41 right there. We've just missed it by a few ticks, but I bet we hit it right on the close. It's going to be my guess. So that's my 2 cents. I hope that helped. Trading's not easy, okay? If anyone presents it as, hey, I'm in my pajamas and I make 6K by 9 a.m. and I go to my regular job after that, it's bullshit. It takes a lot of work. There's not a, hey, just take this location and you make lots of money. That's why people are getting blown up right now who've been making money over the last 5 years. It's because it's not easy. You need an experienced hand to guide you through, and you need a cool, calm mind. So anyways, that's the close. That's how we executed the trade plan today. We had a great day. The algo worked beautifully and gave us some great shorts, and the zones worked beautifully and gave us some great trades as well. So hope everyone has a good night. If you'd like to join us in the room, you can email me at tradertough@gmail.com. And please, please, please keep your head about you when you're trading. These are dangerous markets. You can lose a lot of capital very, very quickly. So minus 178 on NQ, minus 70 on ES, and we'll see where we finish up in about 15 minutes here. I'll talk to you all in the morning. Have a great night, guys.